Today's guest was raised in a real estate investing family, and at 25, he's already doing real estate investing himself. Plus, he works with investors full time as a insurance broker. Today, he shares with us a little about his own journey and a lot of wisdom as an insurance agent to help you as a real estate investor make sure you're getting the coverage you need and you're not overpaying. So if you're interested in making sure that your properties are covered at a good price, listen to today's episode where Bailey Brown shares a lot of insurance wisdom. Hello, everyone. Welcome back to another episode of The Freedom Blueprint. I am Adrienne Green, coming at you today from Portugal, and I'm very excited to share with you our special guest for the week, Bailey Brown from Austin, Texas. So, Bailey, thanks for joining us today.
Adrienne, yeah, it's great to be here. I appreciate you for having me on.
So, Bailey, what I'd like to start with, as always, is how did you get involved in real estate investing?
It's a funny story, actually. My parents have always been in the real estate space since I've been a little kid. My dad was a developer and builder for a number of years. My mom was a builder and then in the flooring space for a number of years. And then they kind of jumped into their own personal investing journey in the long-term rental space. So that's kind of how I got involved. Just personally, I was working on those projects with my dad, growing up. So I really developed a passion for real estate and then went to school for real estate finance, kind of learned as much as I could there. And now I've kind of transitioned into my own personal journey over the last 2-3 years since graduating from college.
That is a lot of experience, a lot of background, more than average for sure in the real estate space. So I love it. You got the family, you've got the formal education. What is your personal investing journey looking like now?
I'm younger to the investing space for sure. I'm 25 years old, turning 26 next month. So me and my fiance set to get engaged in May, and we both have always had huge aspirations to get into the real estate investing space. So really what we've done over the last year is we purchased our first investment property in East Austin. Basically purchased a property that was distressed, had to put some renovations into that, and we ended up living in it for some time. And now we're in the process of trying to fill it with a renter and get into our second property and upcoming in March before we get married. So still new into the investing journey personally, but I do work primarily with investors. So I get to kind of help them through, their property acquisition process, help them kind of scale their portfolios. So I definitely have a lot of learning to do, but still, get some good experience from, working with those investors too.
Wow, that's amazing. So first off, just congrats. I think a lot of listeners here are going to be like, this kid is starting out right. Like he's in his 20s. He and his fiance are getting real estate and building their wealth and their wealth building and everything the right way. So all of our listeners, if you want to give a shout out to Bailey Brown, he's going to give us contact info at the end. So you'll be able to connect with him and just give him a kudos and say he's like on the right path, right? Because this is awesome. I'd love to see it. So you've got all of that personal experience, and something you alluded to there is you get to work with a lot of real estate investors as well. So tell me, how are you working with real estate investors?
So the way I work with real estate investors is I'm an insurance broker, and I primarily cater my business to investors just because there aren't a ton of insurance brokers out there who know how to insure complicated projects like fix and flips, ground up construction, that kind of thing. So what I've done is I've actually built my business to cater specifically to clients just like that, who may have large portfolios that they struggle to manage, or if they just have a lot of complicated projects and they want a reliable partner to make sure that they're covered properly without, charging them their arm and their leg every year. That's kind of where I've tried to fill my niche. And I think it's been a really great experience, like I said, to learn from some of those investors, kind of see what they struggle with in their investing journeys, what problems they run into, and then try to be a resource for them, not only on the insurance side, but just as a fellow investor too.
I love that. I know when I was an active real estate agent, I did the same kind of thing. I focused on real estate investors because I was an investor before I was ever an agent. And there's just so many nuances to those transactions that aren't the same as a primary residence. And I know I had a couple insurance agents that really specialized in investment properties, and they were the go-to for every investor client. I was like, call these guys, call these guys. And it's great that you're out there in the insurance space, kind of doing what I did in the real estate agent space and just going deep into that investing. So let's start, because everybody loves a good story. Can you tell us a good story, either a win or a lesson learned, maybe from when somebody worked with a different agent, about investors and insurance, something where people can have a takeaway to make sure they're not falling into this camp, or maybe they are if it's a good one?
Absolutely. Insurance is very complicated. There's a lot of moving parts, like just like you said, and there's not really a one size fits all to every single project. So that's why it's really key to find good partners that are going to make sure that you're properly covered with, like I said, without breaking the bank. So a lot of issues that I've seen, I'll give you kind of like a common issue that I've seen with a handful of investors that I work with over the past, few years is a lot of these guys have huge portfolios and they struggle to find, carriers that will cover all of their properties under one, kind of
Right.
umbrella or whatever the case may be. So what they do is they resort to working with, maybe not the best insurance company who will offer them coverage for everything, but what they don't really know is like that policy may be covering the property at actual cash value, not replacement cost, which to the average person, that means nothing. But to an insurance broker, that that is like the difference between, a full value check for an investor, if they have a house burned down rather than, them getting paid out 50% depending on how much they're depreciating that home. So there's different coverage types, and knowing that and having someone on your team that, is a good resource and can kind of point you out or point those out to you. It's really important because I've seen situations where a guy's like, I need to get my roof replaced. And, they have an ACV roof policy and they only get paid out $5,000. Their deductible is $5,000. So they just paid $5,000 for no coverage, essentially. So it's just one of those situations where having the right policy, the right coverage, obviously keeping those costs as low as possible, but without sacrificing that coverage is extremely important.
Right. And so let's say that an investor is listening to this and they're like, well, how do I know what I have? How do I know if it's good? Is there anything that an investor can like look at their policy or see? Like, what are some key like red flags that they want to look and make sure they don't have on their policy?
Yeah, absolutely. So, like I said, the big one was what I just mentioned, the actual cash value versus replacement cost. That's going to be your biggie because that's where the insurance company is going to depreciate the value of the home, the roof, whatever you have stored inside, especially if it's like a short-term rental that you have furnished, stuff like that. Having your property covered at replacement cost is super important. And what we've seen a lot over the last couple of years is insurance companies will kind of sneak the terminology in somewhere in the declarations page where it's like payment schedule or actual cash value and just make it very hard for someone to detect. So that's something I would look out for is make sure your policies have you covered at replacement cost, just because you never want to be stuck having to pay that out of pocket. But, there are certain investors who want policies like that, which is why they are offered. So if you're okay with that type of policy, that's totally fine. There are options for it, but, just something to look out for. And if you're trying to make sure that your coverage is sufficient and you're trying to keep your costs low, I would recommend staying away from the actual cash value policies because those are really, really inexpensive, but really, really poor when it comes to coverage. So it's just a kind of medium there. And then another thing to look out for is just making sure that the home is accurately, or the project or the property itself is accurately quoted whenever the application goes through. Because what you'll see a lot of times is a newer insurance agent may just pre-fill stuff in based off of other properties they've done in the past and may not exactly fill it out correctly. And then what will happen is the insurance company will go send an inspector out there. They'll realize stuff's been done incorrectly, and then they'll jack up the insurance rates after the fact because, they view it as a higher risk at that point. So that's something
Right.
else to look out for. And then also just making sure if you've had any work done on the property, any plumbing, any AC, if you've had the roof replaced within the last couple of years, make sure that's reflected on your documentation because if it's not, you're likely being overcharged. So just, a few things, few takeaways to look out for.
Yeah, well, and what I'm thinking is you say that because I'm sure, like you're saying, they hide things in the declaration page. What I love to do when I have to look for something in a document like that is I put it into ChatGPT and I'm like, hey, check this document for this so that I'm not having to like fine tooth comb it myself, but you giving people exactly what they need to put in there to search for those individual pieces. Now, something you mentioned, and I'm curious on an industry wide, you mentioned that inspection. And I feel like, and maybe it's my own personal experience, so I'm curious. Pretty much every time I get insurance or like new coverage now, they're coming out to inspect the houses. And it used to not be that way. Like I think, let's say, when I bought a house in early 2020 or late 2020, I remember they did a drive-by inspection, right? Because they had some issues with the roof. That was like, "Oh, wow, they did a drive-by inspection then." Now I'm like, I feel like every time they're coming in and they're, like, walking in the house, like, I need to let them in the house. Is that normal? Am I it's just me? What's the deal with inspections now?
It's not just you. I promise you, there's not a target on your back. It is one of those situations where these insurance companies are definitely getting a little bit more strict with their underwriting processes. And that's just part of what you're seeing there. So, what we've been seeing is there's some carriers that are offering self inspections. So, you can go in and take pictures of your own property because they just feel like that's a little bit less invasive than just sending an inspector to like go through all your stuff, take pictures of, inside your space.
Yeah.
So that is definitely something that we've seen that has been a little bit more common. Now, I will say it's carrier to carrier. Not every single carrier is going to require something like that, and then it will also depend on the home itself. So one thing we've noticed is that homes that are built within the last like 10 to 15 years, a lot of those are do not require an inspection of any kind, but homes that are built, previously, they tend to require an inspection just because we do see a higher rate of claims on homes of that age just because, the materials are starting to get worn out, the piping may be outdated, they may need to replace, AC, whatever the case may be. So it's definitely becoming more and more common, but it's not like they're singling you out, I promise.
Well, thank you for that. Now, a lot of real estate investors, we are like A+ students. We like to be the best at everything and get, gold stars. So, for those investors, how can they be the best applicants when they're trying to get homeowners insurance for their investment properties?
Yeah, absolutely. It's a great question. So each carrier, they really have a specific target market that they're looking for. So trying to find the right carrier is kind of basically the biggest challenge there. But there are things you can do as the applicant to make yourself look better on paper to these insurance carriers. So one thing I will say is I kind of think of insurance policies like the perfect math equation. It has to do with, the client's history or the applicant's history, the property's history, and then just the general location. So if the property is great, but the client's, credit isn't the best, or they've had some, a lot of claims on their personal insurance history, their insurance pricing may be high. Whereas another candidate may have, the best insurance, history, the best credit record, but the property they're purchasing may have a lot of claims on it, and then their pricing may be high. So creating that perfect combination is a little bit tough. Doing everything you can on your end to make yourself, a good candidate when you are, submitting these applications is definitely key. One thing you can do is keep that credit score high. Another thing you can do is keep your liability limits high. The reason being is insurance companies view people with higher liability limits as less of a risk, and that applies to both auto insurance and property insurance. If you have $1 million in liability on your builder's risk project, an insurance company is going to love that rather than if you have 100,000 because they know if a lawsuit occurs, they're going to be stuck paying that out. So just knowing those kind of little things is definitely key. Does that answer your question? I hope that kind of gives you a little bit of insight.
Yeah, those are some great tips. I absolutely love it. And then, something else you mentioned that I would love to dig into is you mentioned like, hey, if you've got a new roof or replace the HVAC, make sure your insurance agent knows because that could change your policy. Real estate investors were always looking for like where you get the most bang for your buck. And so I'm curious, like, are there certain repairs that or updates, we might say, that really are impactful for your insurance rates versus other repairs?
Absolutely. It's very dependent on location, like I said previously. The reason being is that just because here in Texas, where I'm located, the biggest claims that we see are hail related. So that's going to impact the roof. So here, if you have a new roof, your insurance premiums are going to be drastically lower than if you had a 20-year-old roof. A lot of carriers won't even touch a roof that's 20 years old here in Texas. Now, if you go up somewhere further north that's a little bit colder, they may be suffering from more claims that are, like plumbing based, where, freezing pipes, things like that. So
Yeah.
you in markets like that, you're going to want to make sure that if you do replace the plumbing, you are letting your insurance agent know because that will be a big, factor in determining what your premium is going to be. So I will say location is a determinant, but I'd say the biggest factors that I see across the board from state to state is definitely going to be roof age. Insurance companies love a brand new roof. It's just because they know That's a very expensive claim, and they know that the likelihood of you having to replace it within that year, if you have a new roof, is very, very low. So I'd say that's a very big impact. And then other than that, just making sure your coverage is in line. A lot of times, what we see is people will insure the property at what the lender requires it or at the loan amount. When actuality, that's not how insurance companies determine how they're going to pay you out. They're never going to pay you out for land value. So you don't want to be insuring your land value on top of the structure. So that's another way to, kind of make sure that you're keeping your costs as low as possible, making sure you're just insuring the structure, not the land on top of it too.
Very good points for things for people to check out and, think about as they work to strategize and make sure that they're getting the bang for their buck on their insurance, right? Which
Absolutely.
ultimately, especially with how much insurance prices have gone up, we want to make sure we're not overpaying and yet we want to make sure we get adequate coverage. So I love all of that. Investing in a new market, but struggling to find the right agent. I get it. And I've built a network of investor friendly real estate agents who understand what you need. Skip the guesswork and connect with the right agent today at adriennegreen.com/expert agent network. And I have the link for you in the show notes. Now, I'm curious, let's say choose an investment strategy, whether it's, flipping, short-term rentals, long-term rentals, choose whichever one you think is important or has some caveats or lessons learned for the investors who are doing it in terms of insurance.
Absolutely. So the biggest one that I see people run into issues with is the kind of fix and flip, or if you're doing renovations of any kind, a lot of people aren't aware that there's a specific type of policy that you need to cover your property for that renovation period. It's called a builder's risk policy. A lot of people will just keep their rental policy, their landlord policy, and think that they're covered. With builder's risk, it's really important to make sure that you have the correct policy type, because builder's risk, it's going to cover you for the existing structure and your planned renovations, whereas a typical landlord policy is going to cover the existing structure, but as if you have a tenant in there. So if you have like a major liability claim occur on the property, the insurance company comes and inspects that, or and does their investigation and sees that the property is being renovated. They're likely not going to cover any damage or cover any liability claim that may be occurring on your property. So it's very important to make sure that you have the right policy type. And then again, making sure that you do have it properly covered under that replacement cost. That way they're not coming back and, you know, trying to shortchange you on your payout.
Great. So for all of our flippers, all of our value add investors out there, make sure you're getting that builder's risk policy while it's being renovated and that you do have adequate coverage there. And then what do they do? So let's say you're getting, you're doing a value add, you're doing a burr or something like that. Well, actually, I have two questions. So let's say first you're going to do that burr. Is it when you're doing the refi that you're going back to your insurance agent and you're changing that policy, or what does that look like?
Yeah, so when you are going through the burr process, the best time to switch your policy over is right whenever the renovations have been completed. And the reason being is just because, like I said, if the insurance company comes out and they see that the renovation has been completed, there's a tenant living in there, and then a major claim occurs and it's not covered under a tenant policy, they likely won't pay you out. So making sure you transition at the right time is key. Most people do it when they're at the closing table for their refinance, just because it's a little bit easier. And then most of the time, the lender's looking to save money on insurance throughout that process too, because it gives them a little bit more room on their ratios. So a lot of times that's when people choose to do it. I'd say as soon as your renovations are complete, that's the best time to do it. If you're a person that is doing more of short-term rentals, just making sure it is technically a landlord policy, but you want to make sure it is a policy that endorses short-term rentals, because there's a lot of carriers that don't accept that kind of thing. If you forget to tell them and they don't know it and something does happen on the property again, I would just hate to see anybody suffer, the consequences for that. So just making sure, a lot of these carriers like State Farm, Liberty Mutual, they don't offer short-term rental product. So just knowing that you can't really just go to your run-of-the-mill insurance company and get set up with policies like that. So making sure you have the right policy type is key, and then transitioning at the right time is key too.
Right. And I have another question about the transition. So let's take a value add investor who prefers to flip. Now, do they need to change their policy when they're listing the house for sale? Can they just keep that builder's risk until it sells? What does their insurance situation look like once that renovation's been completed?
It depends on the carrier specifically. Some carriers will require you to get a new policy as soon as that policy or as soon as the renovations are complete. Some will allow you to ride it out until you sell that property. So it's just one of those things where I would double check with whatever broker or agent you're working with, just so you're making sure that you're covered properly. Just because we have seen situations where, the carriers don't mind whatsoever. And then we have seen horror story situations where they're like, you had a tenant in here, or you ended up, selling the property and it's been sitting vacant. And we found out because we sent in another inspector out there and we're canceling your policy midterm. Then it hurts your insurance score, a bunch of negative repercussions. So it's just important to, do your due diligence on the front end.
Right. And, if somebody's getting into this, like our builder's risk policies tend to be on the expensive side of policies, on the less expensive side. How do they compare to a landlord policy?
So it's really dependent on the project itself. There's a couple of ways that you can go about insuring, builder's risk projects, that kind of thing. They have like true builder's risk policies that are a little bit more extensive when it comes to the coverage, but some of those carriers are fully earned, meaning they don't offer refunds, which for investors is kind of a biggie. So they do have products that are like vacant dwelling policies that do endorse builder's risk. And having that, a lot of those carriers do offer refunds. So if you are someone that is doing a fix and flip, something like that, it does give you a little bit more flexibility and then you're not just eating that insurance cost. But, I'd say that's probably the biggest one. But did that answer your question? I apologize.
Yeah, there's so much wisdom that you've been dropping here, Bailey. It's been really helpful. I feel like for any kind of investor, right, who may be listening, if they're the value add flipper, if they're short term rentals, long term rentals, there is wisdom to be gained for everybody on this. So I really
Yeah.
appreciate it. I
Yeah,
think we've learned a
absolutely.
lot. And I think it's time for us to wrap up with our closing quick fire questions, which I think I'll be interested what your answers are. We'll see. Often it's kind of funny. People have already like talked about something in the call that they'll just circle back to here. You haven't as much. So like these are exciting. What's he gonna say?
Yeah,
So the
absolutely.
first is, what is your go-to tool for managing operations?
My go-to tool for managing operations, are you asking in terms of like in my investing or
As
in
an
my
investor, so maybe there's been a tool as you did like the renovation on the property you had or that you're using now as you get into like that tenant space, of the long-term rental. Has there been any tool that you've really depended on a lot for that?
I mean, to be honest with you, I've really just utilized really good mentorship. I have a mentor here in Austin who's kind of just been helping me, kind of holding my hand throughout the process and like in searching for tenants, and then also my dad. But as far as like resources for operations, anything like specific tools that I use, it's really just going to be, man, it's a tough question.
Mentorship's a great answer. You're good
Yeah,
with mentorship. It's cool.
I don't really utilize. It's hard because I don't really utilize any specific like back end tools to, because like I said, I have one property, so I kind of manage the operations on my own. But I'd say for larger scale investors, there's a lot of things you can do that, utilize AI that have been kind of streamlining things on the back end and then, making operations a little bit more sustainable, or a little bit more efficient. But, that's all the input I have there. I'm sorry.
Yeah. Well, and it's true, Bailey. I really feel like it's really more about like four doors where people start to get in what I call like the messy middle, right? Where they
Yeah,
do need to start thinking about the systems, the tech, and the team so that this doesn't become another job for them. But at one, you're still like in that phase where you're seeing what works. And it's silly to have like a go to tool or a system necessarily until you figure out what works and do it a few times and see what you like. So,
exactly. Yeah, I'd say like some ways that we've been trying to streamline our operations on the back end. I guess I can give you some input onto that. We are just trying to automate things a little bit just because like I said, I do work with investors and that kind of takes up most of my time making sure that they're set up on the insurance side of things. So I am trying to actively find ways to, streamline my back end processes, look at the finances of the property, that kind of thing. So if you do have tips on that after the fact, I would love to hear your input.
oh, yeah. I love all of that. Automate, tools, tech. That's my thing. All right. This next question's also going to be kind of fun when we apply it to you. What is one piece of advice that you'd give to your younger self when you were starting out? So, I feel like you're kind of still in that, like, let's say, like, first third, right, of your investment journey. And yet, maybe you do already have some lessons learned that would have helped you when you first bought the property or something like that.
Yeah, so I would say the first thing is I wish I would have gotten started earlier. I wish I would have gotten sooner. I was very scared to pull the trigger on the first property just because I, had seen 100 people do it in front of me and I was just like, well, I know how to do it. I'm scared to do it. So I guess I just wish I would have started a little bit sooner. And then, like I said before, looping back to mentorship, I wish I would have found mentorship sooner too, because I've been able to navigate a lot of obstacles in my investing journey and in my real estate experience just by having those mentors in my corner because I'm able to ask them questions. So I'd say that's probably been our biggest asset is just having Steven, my mentor, there to be able to bounce questions off of.
That's a great wisdom. Love it. Thank you. And then finally, what is a book that's been transformational in your investing journey?
I'd say a book that's been really transformational just in my, I guess, overall financial journey was just Rich Dad Poor Dad because it really opened my eyes to the mindset aspect of finance and real estate in general and just how to accumulate wealth. I felt like I was very closed minded because I had grown up in a school and they taught me how to make money, one way, which was getting a job and, buying a house and just working that job for the rest of my life. So I'd say that book was kind of like the catalyst for kind of expanding, my knowledge into the real estate space and really like looking for additional ways to, you know, drive in, some money so I can, really build long-term wealth for me, my fiance, and our future family someday. That's been a really great book for me.
Love it. Love it. Fine. Thank you. And then to wrap up, Bailey, if anybody is like, oh my gosh, he's amazing, let's talk, or I'm in the Austin area, or hey, I need insurance, what is the best way for them to reach out to you?
I'd say good old fashioned email, or you can just give me a call or shoot me a text. My email address is bailey.brown@goosehead.com. I'm sure it'll be included in there. And then my phone number is 512-491-3797. That's my cell phone number. So if you have questions, you just want some free estimates, you want to talk, you can just shoot me a call or shoot me a text, whatever you prefer.
Love it. And we'll have all that in the show notes. So for those of you who are listening and running on the treadmill or driving in the car, you can grab that later and you and Bailey can become BFFs. All right. So
Absolutely.
well, thank you so much, Bailey. This has been a great episode. And for all of our listeners, please make sure that you give a comment on what was helpful for you wherever you're listening. If that's YouTube, Apple Podcasts, Spotify, I would love to hear what you took away from here. And then think about what investor you know who could benefit from hearing Bailey's story and go ahead and shoot this over to that person right now. And then join me again next week for another episode of The Freedom Blueprint.